morning, good afternoon, and good evening to those of you joining us from all over the world. Thank you for making the time to listen into this discussion. I'm Sarah Collenbrander, Director of the Climate and Sustainability Programme at ODI, a global affairs think tank headquartered in London. Welcome to today's event discussing the macroeconomic and fiscal aspects of a green economic recovery from COVID-19. We have a fantastic lineup of speakers today examining how embedding climate priorities in national budgets and expenditure frameworks can help green pandemic response and recovery measures, while still delivering long-term human and economic development. Today's discussion is the second in the Green Recovery Dialogue, a high-level series seeking to elevate the conversation on how investing in green recovery efforts can accelerate climate change mitigation and enhance adaptation. The series is hosted by the Climate Support Facility's Green Recovery Initiative, a World Bank program which aims to help countries build a low-carbon, climate-resilient recovery in the aftermath of COVID-19. The World Bank is proud to host this event as part of its official COP26 program for Finance Day, as it seeks to inspire and shape important conversations on financing a green recovery. We are streaming today's event on World Bank Live, and it will be available for replay after the event. Please do share your thoughts with us on Twitter using the hashtag ClimateActionWBG. As world leaders assemble here in Glasgow, it's clear that the climate crisis has arrived. 2020 was one of the warmest years on record, and the global average temperature last year was 1.2 degrees Celsius above pre-industrial levels. Even within the UK, many participants battled floods and winds last weekend to make it to Glasgow. Meanwhile, while the pandemic raged, countries around the world were battered by cyclones, floods, fires, extreme heat, demonstrating how the climate crisis will intersect with other crises. The IPCC's sixth assessment report makes clear that global surface temperatures will continue to rise under all emission scenarios, and both the 1.5 and 2 degrees targets will be missed unless countries make deep emission cuts quickly. All eyes are on Glasgow to find out whether governments, businesses, and civil society can keep the goals of the Paris Agreement within reach. As the World Bank Group's Climate Change Action Plan for 2021 to 2025 underscored, climate change and human development are deeply interconnected. Achieving the Sustainable Development Goals and the Paris Agreement will require tremendous investment, but this needs to be understood as an investment and not a cost. The OECD estimates that nearly $7 trillion a year is required until 2030, but that this will pay for itself many times over in terms of better public health, improved resource efficiency, and enhanced productivity. But nations' public resources are limited and further constrained by the impacts of COVID-19 on tax revenues and economic activity. So, how can governments unlock the investments needed to secure a livable planet while also coping with a devastating pandemic? What fiscal policies can raise and steer capital away from polluting systems to climate-smart investment? And how can leaders reorient national and local economies to thrive in a low-carbon world? These are some of the questions we hope that our excellent panelists today will address. So to kick off, let me welcome our first panel to discuss these challenges. Please welcome firstly, Ms. Marie Pangestu, Managing Director for Development Policy and Partnerships at the World Bank and the co-chair of the High-Level Advisory Group on Sustainable and Inclusive Recovery and Growth, and Dr. Maria Flachbart, Parliamentary State Secretary at the German Federal Ministry of Economic Cooperation and Development, or BMZ. Thank you both very much for making the time to join us today. Marie, let me start with you. Can you tell us why macroeconomic and fiscal policy are so important to secure a green recovery and deliver the Paris Agreement?
I think what we are seeing is two crises. You mentioned the climate crisis very well, but we also have a development crisis accentuated by COVID. And we also know that the virus was zoonotic in nature. So the interrelationship or links between planet, people, and economy is very clear. So in the recovery and the development henceforth, we need to have an integrated approach of a green, resilient, and inclusive recovery. And what does that mean? That really means a whole of economy and a whole of government and a whole of society approach. And in the case of macro and fiscal policies, it requires broad structural reforms across the board. But in macro and fiscal policies, it means mainstreaming climate in the macro and fiscal policies. What does that mean? If you talk about the macro policies, we need to be able to incorporate the climate risks into the macro modeling. Otherwise, you will have a scenario of business as usual. Whereas if you incorporate the climate risks, you will understand the trade-off to the future, that if you don't, inaction today is going to cost you future growth, future productivity, health issues in the future. So the cost of inaction today is high. So the cost of inaction is higher actually than the cost of action. That's the kind of modeling that we need. And then when you translate it to fiscal policy, you have to mainstream climate into the fiscal policy. And this will require a shift, which some countries are already making. So if you look at the expenditure side and the spending side, you mentioned that countries are fiscally constrained with the pandemic. So they have to have effective spending as well as address climate. What does that mean? In the recovery, there's lots of discussion about the green stimulus, that if you spend on stimulus programs that can achieve both stimulus, addressing poor people, addressing those who need it, as well as achieve climate. To make it concrete, I'll give you an example that some of the programs we are doing, for instance, in tourism-dependent area, you help the tourism sector by providing funding for cash for work for the people in that community to rebuild the tourism spot as a sustainable tourism. And then you also give training program to the tourism workers there, so they can become either new jobs or become more sustainable tourism guides or whatever. So that's an example of how you can achieve stimulus, social protection, and then future growth as well as sustainability. So that's the kind of programs we have to have. And then there's what we call green tagging of the budget, or sustainable tagging of the budget. How do you have your spending be attached to green or sustainable outcomes? This is a big issue because how do you measure it, how do you measure the impact and so on, is obviously being discussed. And I think the other one is how do you spend your budget on infrastructure that is sustainable? Right? That's I think another angle. And one more important one on the spending side is repurpose subsidies that are actually not helping climate, whether it's fuel subsidies or fertilizer subsidies, which can be repurposed for more social as well as climate objectives. And then on the fiscal incentive side, how do we have fiscal incentives that can shape expectation that will change the behavior of companies or consumers, that will lead also to climate and development outcomes, whether it's carbon pricing or fiscal incentives for renewable energy and technologies and so on. So those are just, I think, some idea about how do you mainstream climate into the macro and fiscal frameworks of countries.
Thank you so much for that comprehensive overview. And I think something that you teased out there that's really important is to remember that a different response is required at different points. In the immediate heights of the COVID peaks, the priority is to take care of lives and livelihoods. And then as the peaks recede, laying the foundations for a green economy. I really welcome that point. Let me turn to you now, Secretary Flaxbert. At the World Bank Group annual meetings just last month, BMZ announced its support for a new program through the Green Recovery Initiative to help developing countries to advance this whole of economy approach that we just heard about to climate change. I understand that both fiscal and governance interventions are going to be part of this broader program alongside financial, trade, private sector development, very comprehensive package of measures. We'd love to hear from you what you see as the really key interventions that should be prioritised as we move into this green recovery phase, and many countries move into a green recovery phase from COVID.
Thank you very much for this question. And so let me underline some things, some ideas which Marie already has mentioned before, with a special point of view of a government. So we all know that time is running out to reach the 1.5 degrees. There is no doubt. We saw the latest IPCC assessment report emphasizing the need for transformative climate action at an unprecedented scale to avoid the worst impacts of climate change. Impacts of climate change will occur, there is no doubt. So while the COVID-19 pandemic, as we know, we have to face two crises at the same time. But let me underline, the time of recovery from pandemic is also opening a window of opportunity, this green recovery. So therefore, the last year we joined forces with the UK, with Austria, with the World Bank, and started this green recovery initiative to strengthen and to expand its impact further. Germany has committed an additional 60 million euro for its whole of economy program, because this approach recognizes that development must go hand in hand, and that is a special point of view of a government, with decarbonization, and consider the impacts of climate change for the entire economy. And to tackle this, the program will focus on creating the right enabling environment for climate action, including the private sector. This is a special idea, I think. So the most effective interventions to reach our climate goals, in my view, are those that foster transformative change across sectors, such as green macro fiscal reforms. Therefore, key government actors that traditionally have not been involved in climate action, such as ministries of finance, central banks, financial regulators, need to recognize that the macro criticality of climate change, and this is our point in our political discussions. It is thus crucial that the program provides specialized climate expertise in these institutions. As the World Bank Group's new climate change action plan rightly states, it will be important to integrate climate priorities to macroeconomic frameworks, national budgets, and expenditure frameworks, as well as financial sector regulations. Climate has to be treated as a cross-cutting issue, not as a separate topic. So among the key fiscal intervention is getting the prices right. For example, by introducing carbon prices and by reducing hidden fossil fuel subsidies, for example. Yet in order to support a just transition, governments will have to take poverty and distributional effects into account and mitigate these, because without doing this, you will not get the acceptance of the population so far.
Thank you very much. And I think your point about the integration of climate and development is really key, and not just a story for emerging economies either. There's a lot that many countries can learn from Germany's Energiewende and the efforts to ensure that cities, local utilities, households are invested in the renewable energy future. I'm going to turn back to you, Marie, for a second question. As Secretary Flachsbach just mentioned, the World Bank, BMZ and others are now scaling up the Green Recovery Initiative. Can you tell us a bit more about how the bank is supporting its client countries who want to do more after COVID-19?
Yes, let me just re-emphasize what was just mentioned, that it is about integrating climate with development. And in our perspective, it has to be country-led and country-owned. So we work to support countries to be able to come up and design the strategies, long-term low-carbon development strategies that will integrate climate with development, and therefore inform them of the national determined contributions that they must make to the climate change. So we are working with countries to help them design the long-term low carbon development strategies, including the macro modeling and the structural modeling that incorporates the macroeconomic aspects of the climate risk and the trade-offs into the future, because that narrative needs to be clear to the politicians and the policymakers. And at the end of the day, you have to say, okay, it is addressing climate, but you are getting growth, you are getting jobs, and you are addressing development. Because without that, there will not be the political support to move forward on this agenda. So you need to make that then translate that into the concrete policies that needs to be there and the resources that are needed. So we provide the technical and analytical and diagnostic tools to be able to design that, and so that countries understand the costs and benefits of the different pathways to decarbonization, and prioritize, which transformations in the systems, is it energy, is it agriculture and land use, that they will prioritize given a constrained fiscal space, as well as the ambition that's needed, right? So given the constrained fiscal space, then they will need resources as well as technology. And that's where I think designing, helping countries design what they need to do is very important, but in a very integrated way, as we discussed, and in a whole of economy approach. And once you have that kind of design, then the government can decide, okay, this is what I will allocate my budget for. And then the multilateral development banks and donor countries can also come in and fund different aspects of it. But what you want is private sector mobilization to come in, and that's where the regulations on the private sector side, whether it's greening the financial sector or other regulations that are needed to crowd in the private sector and de-risking instruments and so on, are important. So designing that, working with governments to design that is what we are doing with different countries. And I think one of the things we do is, I'll just close on this, we have this new diagnostic tool called climate CCDR. I always get this wrong. Climate Change and Development Country Reports. Yeah. So these are diagnostic tools that will help countries better design the policies that will be needed.
I think no one wades into the climate space without being overwhelmed by acronyms, so I wouldn't hesitate. I also was struck by the fact that you use the term constrained fiscal space about 4 times there. It really is the crisis of our times, isn't it? And the narrative around debt and sustainability is really
talked about that, but
preeminent.
I'm sure our Jayla will say something about that.
And so our last question from this first panel, back to you, Secretary Flaxbert. We'd love to hear what you see as the key outcomes from the next phase of the Green Recovery Initiative. What does success look like in the next few months and the next year?
I think the key outcomes are the reform of existing regulatory, political and institutional frameworks. This is the key, in such a way that they enable the transformation towards a net zero and climate resilient development. So the greater use of development policy operations of DPOs with a focus on climate smart macro fiscal reforms is crucial hereby. So applying ambitions, prior actions in DPOs, the World Bank can support developing countries to green their economies and recover forward. And we just heard this, you just mentioned this, Marie. Another key outcome are countries' strengthened institutional capacities to design and implement climate-related policies and projects. As first entry points, with the whole of economic program, we seek to support specific capacity building both within the World Bank and partner countries and institutions. At the bank, analytical instruments used in its economy-wide diagnosis will have to systematically include climate considerations. So trainings for country and regional economists to support client countries with advancing a whole of economy approach to climate change will be also important. And the country level, the program will have to scale up technical assistance for central banks, for ministries, for finance and financial regulators, including on fiscal instruments and risk, greening finance, as well as macro-critical aspects of climate change. I think it will also be central that the World Bank aligns its climate policy reforms with the IMF, that has recognized the macro criticality of climate change. Both institutions, this is my wish, need to provide coherent advice, and we therefore hope for analytical and operational cooperation. So, given the high relevance and urgency of such transformative approaches, I highly welcome today's exchange today, and I'm really looking forward to learning about the other panelists. Thank you.
Thank you very much.
Don't worry,
It's
the World
fine.
Bank are working well together. Jayla is over there. We work very well together on that aspect, on the
Great.
macro
Wonderful.
critical aspect.
I think it's very, very necessary.
Yes,
what
very
you're doing.
necessary. So
Yeah,
because the countries otherwise will
Right,
not get
right.
the coordinated approach.
So thank you for that.
And I want to take a moment to say that I've never heard anybody wish upon a star for analytical and operational alignment, so that has to be a new technical high as well. Thank you very much, Ms. Pangestu, Secretary Flaxblad, for joining us today. As gripping as that was, I think we should probably hear from some men, so I'm going to turn to our second panel, shake up this gender imbalance, and to learn a bit more about how countries can embed climate priorities into their national budgets and their long-term development plans, while always keeping that urgent green recovery in mind. Specifically, we're looking to hear a bit more about how fiscal instruments and tools can be tailored to countries' national contexts and the barriers that they are facing one by one. So joining us, we have in person Ms. Arzu Onsal, Deputy Director of the Climate Change Office in Turkey. And then online, we have Dr. Muhammad Chatib Basri, the NDC Economic Advisor for Indonesia, and Professor Dr. Ottmar Ehrenhofer, Director and Chief Economist of the Potsdam Institute for Climate Impact Research, and Director of the Mercator Research Institute on Global Commons and Climate Change. So quite a lot of doctorates in the room and on the call right now. If I might turn to you first, we're not going to have gender balance yet, ladies and gentlemen, but any minute. If I can turn to you first, Ms. Onsal. Turkey has ratified the Paris Agreement last month and announced a goal of reaching carbon neutrality by 2053. How can Turkey's participation in the agreement shape the country's COVID-19 recovery strategy? Can you give us some examples of how action on climate and action on COVID in Turkey are related?
Thank you, Sarah, and thank you for World Bank for giving me the opportunity to raise Turkey's voice. In fact, Turkey has always been in supportive of international environmental negotiations and the community. Therefore, we have signed the Paris Agreement in 2016 and in New York, and submitted our INDC in 2015, just before the agreement, in fact, just after the agreement. So, and we pledged for 21% cut in emissions since then. And we have been working on this issue since 2015. And as a new policy target, we have been working on carbon neutral. We will be working on carbon neutrality by 2053 right now. As you have mentioned, unfortunately, COVID-19 pandemic has been hit hard for all the countries. Likewise in Turkey. Since the beginning of this pandemic, we have almost more than 7.1 million cases of positive cases, and we have lost almost more than 64,000 people, our lives. But by the initiation of the vaccination program, immunization program in January, we have reached fully vaccinated people of our age over 18 has been reached to almost 75% of the population has been vaccinated, and this figure will be increasing. In response, when we come to in response to the COVID pandemic, as the other countries, first reaction was the current budget spending. In response, in the first measures, Turkey has taken various social protection actions and supports to protect vulnerable communities, and jobs were given. And social protection shield has been extended for households that are already being benefiting from social assistances. Plus, we have initiated some direct cash support to the households that are not readily under social, they were not readily the social assistance beneficiaries, but in need of assistance. Until March 2021, we have delivered almost $6 billion under 6 different support programs. And during this period also the employment was a key issue, and we have received, we have given under 19 different premium support incentives and discounts to protect the jobs, the registered, insured, and to the disadvantaged groups. Under these programs, we have delivered more than $7.5 billion to protect these people. And as we are working on this issue, climate change has become the most important environment and development problem in our time, and negative effects of the environment and human health and economic system is all over the countries we see. On the other hand, on one hand, we need to reshape our investment strategies towards a low carbon future, but we need to protect our jobs and recover our economic losses in this COVID-19 pandemic. And we are seeing that this pandemic poses a significant challenge in achieving the global climate change target. Investments in the climate field have decreased globally. We are seeing this. At this point, we recognize the importance of global cooperation and finance to divert our financial resources to the right fields to ensure that we are both dealing with the impacts of the COVID-19 and we are still following our climate targets. In Turkey, as I have mentioned in the beginning, action on climate change are implemented in accordance with our current NDC, but we will be updating that one as well. We have started the work. And regarding how we are relating this NDC issue with the COVID-19 pandemic, our government announced an economic reform package program in March 2021. And both in this package and in our medium-term program, green transformation of the industry is at the core of all of these programs. These reforms in Turkey will include developing, for example, green organized industrial zones, preparation of a circular economy action plan, increasing the R&D to development of technologies for green production, improving ecosystem for greening financing. We want to build our infrastructure for sustainable and intelligent transportation. We will establish new charging infrastructure, and the use of electrical vehicles in public transport fleets and service vehicles will be extended. Such transformation undoubtedly requires considerable amount of investment and financing, as in the case for all developing countries. And as Dr. Maria mentioned, the private sector is the area that needs the most finance in this green transformation. Thank you.
Thank you very much. Having just ratified the Paris Agreement, it sounds like you have a busy few months ahead. So we all wish you much luck with that.
Effect on the issue, but nowadays, since we will be updating our NDC and our long-term strategy, it is more busy right now. You're right. Thank you.
Well, best of luck with that. And let me now turn to some of our virtual participants. Firstly, to you, Dr. Basri. We understand that you are working with the government of Indonesia to assess pandemic stimulus measures and develop green recovery approaches. What is the current status of the economic recovery in Indonesia, and where do you see the big opportunities and challenges for greening that recovery?
Well, first of all, thank you very much for having me. Let me try to respond to your question one by one. First, let me talk a little bit about the current status of the economic recovery. And similar to like many other countries, Indonesia's economic recovery depends on ability to cope with the pandemic. And last year, Indonesian economy, we experienced an economic contraction minus 2.1%. This contraction was relatively small compared to many countries in the region. And one of the reasons behind it is because we did not impose a very strict mobility restriction. Yeah. But I have to say that we learned the hard way in last July, June 2021, a couple of months ago, due to the Delta variant, the number of the COVID cases, infected cases, and also the death toll jumped quite significantly. But the good news is the number of the COVID-19 cases declining very sharply, and we were successfully contained the second wave. For the 2021, due to the relatively limited access of vaccine, because Indonesia is a country with the population around 270 million people, as you know. So the ratio of the fully vaccinated people to the total population is still less than 30%. So this will take some time before we can reach around 70% or reach the herd immunity. So the projection for economic growth for this year perhaps will be around 3.5 to 4%, perhaps a bit slower compared to some countries in the region, but I think we are making a progress. Now to your second question, I would like to echo what Mary said regarding the room to do the green fiscal stimulus. I think there is a good chance here that we can use this opportunity not only to focus just for the stimulus, but focusing on the so-called like the green stimulus. For example, like the budget allocation can be more focused on the green sector. I can give an example. We can always discuss later on. If we would like to provide the cash transfer, yeah, this will be good for the people because they can provide the jobs, give an income for the vulnerable one. But you can come up with a project, the green project, like for example, like mangrove. Yeah, on the revenue side, you can do several things, including to introduce like a carbon tax. Yeah, but I think the biggest issue that we are facing, and this is not only in Indonesia, I do believe in many developing countries as well, is about the implementation. We all know what to do. Yeah, let me quote what Jean-Claude Juncker said, the president of the European Commission. He said that we all know what to do, we just don't know how to get re-elected after we've done it, right? So the political economy issue is a very important. This is the thing that we need to address. So that is why the narrative is very important. And then let me talk from the perspective country like Indonesia or developing economies. I do understand that maybe this perception is not right, yeah. But for many countries, developing countries, the issue of climate change is often perceived as a luxury goods. Yeah, the reason behind it is because we are too busy with the day-to-day problems, the issue of poverty, the issue of unemployment, health, education. So if we want to be successful in sort of like discussing about this issue of this green fiscal stimulus, or we want to be successful that this policy could be acceptable, we have to link this issue with the development issue. We have to come up, we can discuss later on, we have to come up with some policies that will give co-benefit both for development and also for the environment. So that will be the main challenge for that. Yeah, but and I can see some other opportunities as well. Yeah, for example, nowadays we are in the era of the very relatively low interest rate. This will allow investment, which is perhaps during the, a couple years ago was not affordable because the investment in the renewable energy can be relatively expensive. But nowadays can be possible. Yeah. But one thing that besides the political economy that we have to look at carefully is the transitioning, to renewable energy, because I think we have to learn a little bit from the experience like what's been happening recently about the energy crisis, that the energy transition should be done carefully, because otherwise it might create another crisis as well. So that is why the issue of the roadmap is very important. And then the transitional risk is also very important because maybe some sectors will be affected by this green fiscal stimulus or by this policy, and there will be a resistance come from the sectors. Then the issue is, how do we mitigate this? What kind of compensation can be given to make sure that this policy could be acceptable?
And I think we should take a moment to remember that Indonesia has an exceptional track record in navigating some of these political economies. I'm speaking, of course, to its success in reforming fossil fuel subsidies in 2013, 2014, which I believe at one point were reaching 25% of government revenues. So success on one front, lots of lessons to be learned as you tackle the next round of fiscal reforms for a green recovery. I'd like to turn to you next, Dr. Ehrenhofer, to ask about your view on the current global picture, particularly the current global fiscal picture for a green recovery. What do you see as the key interventions that have shown success, and where are efforts falling short?
Yeah, thank you very much for the invitation and to participate in this great panel. Let me start with an observation, and the observation is gives us a quite, at first glance, a bleak outlook. So all over the world, we have seen after the recovery of COVID increasing gas prices, and the gas prices have been increased even much faster than the coal prices, and this brought coal back on the stage, so to say. Just to give you a number, so the global emissions are still rising after a jump in the emissions. So we are now back on the original trajectory. And this is due to the fact that we see in many countries during the recovery, a sharp investment and a sharp re-emergence of coal. And when all coal-fired plants, which are already implemented and the ones which we planned operate over their economic lifetime, all these coal-fired plants will absorb around 330 gigatons CO2, which is fundamentally the available carbon budget for a 1.5 degree limit. And if you allow a little bit more relaxation, 1.6, 1.7, there's a little bit more room. But nevertheless, we are at risk that we close the door to ambitious climate targets or to ambitious climate limits if we do not deal with the coal issue. Nevertheless, there are signs of hope, I have to say, and I would like to highlight the announcement of China to stop financing coal-fired plants abroad. And this was not very well recognized in the public debate, because if China and other countries would stop even abroad financing the coal-fired plants, this would have a really significant impact on global emissions, not immediately, but over time. So in that sense, I would say this is a real sign of hope. And this could help us to deal with the coal issue. The coalition between South Africa and donor countries to kick off a just transition is a real sign of hope. And also, I would say, when multilateral development banks finance in countries in Southeast Asia the buildup of renewable energy capacities and help them to phase out coal seems to me is crucial. And so all the necessary instruments have been mentioned. So we need for the public infrastructure investments, shadow prices, which helps us to redirect the infrastructure investments into the right direction. Thinking about the subsidies, and Indonesia is a really important example how to reduce harmful damage, harmful subsidies quite effectively. And the last thing is what I would like to highlight is carbon pricing. Carbon pricing is essential because carbon pricing has three important characteristics. The one is it penalizes fossil fuels according to the carbon content and helps us to reduce the use of fossil fuels. Secondly, it makes green investments more profitable, but even more important, carbon pricing generates revenues. And these revenues can be used for compensating impacted industry and households. And it seems to me this is really very important to think about these compensation schemes. So this is, even in Germany, we have now a very lively debate on this issue. And I agree that the political economy issue is a very important one. But here I would like to emphasize, I fully acknowledge and recognize the enormous importance of all these political economy issues for politicians. But nevertheless, the situation is quite dramatic because emissions are still rising. We haven't bent the curve. And if we will not do this very immediately, and we have decisive action, at least to start with that, so then we are closing the door to ambitious climate policy. And therefore, I think macroeconomic fiscal policies are absolutely essential, and mainstreaming of fiscal policies with climate policy is absolutely crucial for at least to keep the door open for the 1.5 target.
Thank you very much, Dr. Edenhofer. What I heard from you there is the importance also of the way that these specific financial instruments, fiscal instruments, are designed. That coal retirement funds can't be used to reward investors who came to coal late in the game when the science was clear. That carbon pricing needs to be used to make sure that those who are affected are compensated, or those who are vulnerable are protected. And I think that's a really important note. I have a second question for each of my three panelists. I would ask you to keep this next response to just 1 or 2 minutes so that we can make it to our last panel session, please. So firstly, back to you, Ms. Onsal. You mentioned earlier that Turkey is planning its long-term strategy and to update its NDC. In that context, can you tell us the 1 or 2 factors that you'll really be considering as part of a macro-fiscal approach to climate change in Turkey?
Okay, let me, as we know, something happened? Okay. One of the major challenges that developing countries face is to find the balance between the sustaining high growth rates and reducing the greenhouse gas emissions. And in terms of making this, in terms of macro fiscal perspective of our key target, we have put to increase the share in the green finance and strengthen our macro fiscal management capacity at the center of our policy targets, I have to say. We aim to implement key reforms for robust green finance framework in compliance with international standards. And we have done this under different policy priority packages. But I have to mention that we have the leadership of our president. We have launched a new green development revolution. And under this, in terms of, as I have mentioned, macro fiscal policies, we will be green finance and green transition of our industry have been addressed in several national policy documents. Green Deal Action Plan we have released in July 2021 provides a roadmap for green finance and transition actions of Turkey. In this plan, we are planning to implement key reforms such as reviewing national incentive system in a green perspective and developing a green taxonomy, for instance. Moreover, we are strengthening our green finance ecosystem in line with international standards. We will be providing a legal infrastructure for our sustainable financial instruments until the end of this year. Our Capital Market Board has recently published a sustainability principles framework, and we will be publishing green bonds and green scope guide very soon. Let me mention two last things, maybe. Turkish Stock Exchange has already a sustainability index that provides a sustainability rating data to the market participants. And Banking Regulation and Supervision Agency has started to develop a strategic plan for sustainable banking. We believe that our works will pave the work for catalyzing the private sector investment needed for Turkey's green transition. As I have mentioned, the green transition is vital for our country's further integration with the global value chains and increase our competitiveness. Thank you.
Thank you so much. And also I can see that you had to whiz through a couple of pages there, so thank you for that as well. Turning next back to Dr. Basri online. I understand that you're working across a range of Indonesian ministries to advise them on how they can align their stimulus measures with the country's NDC. What do you think are the most innovative fiscal tools for delivering on a green recovery in Indonesia?
Well, thank you very much. Let me come up with one proposal that I call a triple win. Triple win in the sense that this is good for the climate change, good for the vulnerable groups, the development issue, and good also for the macroeconomics. The question is there such a policy? The answer is yes, there is. Mary actually in her first remarks mentioned about this. So let me give a sort of like, an example about, a concrete example about it. We do understand that one of the most important issues that many countries have to deal, including Indonesia, is to save lives and livelihoods. So that is why providing the social assistance is very important. Allocating budget for health is very important. Supporting budget for the small medium enterprise is very important. The question is, where does the financing come from? Yeah, in our idea is we can look at the budget allocation for this. So for example, on the revenue side, the government can start to introduce some revenue generation, maybe from carbon tax. Yeah, excise on plastics, excise on fossil fuel. Yeah, and also look at, in the case of Indonesia, because the tax incentive to GDP already about 1.6%, and most of this incentive, the tax expenditure, were allocated to the dirty sectors. So if the government somehow could reduce it, then we can get additional funding from the revenue side. What about from the spending side? Reduction of the fuel subsidy. Yeah, reduction of the electricity subsidy. The question is whether this is possible politically. My answer is yes, it is. Why? Because if we can get additional funding, we can save some monies from this. We allocate this money for health, for social assistance, and support the small medium enterprise. And this kind of policy is politically acceptable because we use the money to support the vulnerable groups one. So that is why, and I can say that, with this kind of model, with this kind of narrative, we use the green fiscal stimulus to support the vulnerable group. And maybe not many of us realize Let me give an example about the fossil fuel subsidy to GDP in Indonesia is even higher than the spending on health. So that kind of narrative is very important. So in this way, the fiscal stimulus can be green, good for macroeconomy, yeah, and development, and also politically acceptable because it supports the vulnerable groups.
Thank you very much. And my last question is to Dr. Ehrenhofer. Our event is, of course, taking place virtually and physically, with a number of our panelists having come to Glasgow for the discussion. One of the main points that's being raised during COP26 is, of course, developed countries' failure to mobilize the 100 billion of climate finance, which is obviously a risk in terms of maintaining trust in the UNFCCC process. But also, everyone who's here today, virtually on this conversation and at Glasgow, is aware that 100 billion is a small amount of what is needed for climate action. And so I guess against that backdrop, we'd love to hear from you what wider role the international community needs to play in supporting developing countries on their fiscal and governance components of a green recovery.
Yeah, thank you very much. So I fully agree that the 100 billion is definitely not enough. In particular, when we think about supporting developing countries in just transition. So that's clear. I think the international community can do three things. First, we can basically share the knowledge about the best practice cases, and Indonesia is a fascinating example, and the triple win policy is an example, not just for Indonesia, by the way, it is even an example for Germany. And it's about reallocation funds, setting the incentives right, and to support the vulnerable people. So I think that's the right way to go. And this is something where we need a redesign and a reallocation of these policies. And of course, so when then we might think about supporting countries, and then in exchange of that, so they might introduce carbon prices and reduce subsidies. I think, and also with the support of the multilateral development banks, and I mentioned this in the beginning, they can play an enormous role when they change their financing model. So I think the international community has a huge leverage, but I would say these powerhouses are bound, and they are not fully aligned with a reasonable fiscal and a reasonable climate policy. And I think when we can work together along these lines over the next few years, we can really make great progress.
Thank you very much to our second panel from their insights from Turkey, Indonesia, and a global perspective. We are very lucky to have some concluding insights and remarks from another two exceptional leaders in this space. Ms. Seyla Pazabashoglu, Director of the Strategy, Policy and Review Department at the IMF, as well as co-chair of the High-Level Advisory Group on Sustainable and Inclusive Recovery and Growth, alongside Ms. Mari Pangestu, I believe. So an opening and closing act. And Mr. Liam Byrne, UK Member of Parliament and Chair of the Parliamentary Network on the World Bank and IMF. Thank you both very much for joining us virtually today. Firstly, Seyla, over to you. We'd love to hear your thoughts on how the IMF has been able to support developing countries with their fiscal policies to green their recovery, and particularly how the IMF, World Bank, and other development partners can work with their clients on this ambitious idea of a whole economy approach to climate change.
Thank you. Thank you very much for this, and to the World Bank for the opportunity to provide some concluding remarks in this very good discussion. We just published an IMF climate note, which provides rigorous analysis that unless we change global policies, we will not be able to reach the goal of 1.5 degrees. And there are critical gaps, both in terms of ambition and policies. So it's really critical, and this is not a medium-term, long-term issue. This is in the next 5 years, important action and policies need to take place. For our developing country members, this is both an opportunity as well as a challenge, because it's, as was said, many countries are already trying to deal with the pandemic. There has been very limited fiscal space to deal with the pandemic. These countries also face, some of them, very high debt burdens. So it's really important for them to be able to transition to a greener, more resilient economy, to be able to be supported by the international community. So I want to basically say that this is a global risk that we all have to address. And in that context, as Marie mentioned, this is a major climate crisis, and it's one of the biggest global risks. And unless we all come together to deal with it, and it was said very well by the secretary, you need the central banks, ministers of finance, development banks, others, all come together to really make sure that we address this issue. At the fund, we have put this at the heart of our work. We have been providing macroeconomic surveillance, Article 4 consultations. For those that this is an acronym, it's basically the economic health check that we conduct annually with our members. And we have committed to engage with the 20 largest emitters of greenhouse gases on their mitigation policies. We're also aiming to step up coverage of climate adaptation issues in our program work, in our work with vulnerable countries that are trying to transition to a low carbon economy. Second, in terms of financial surveillance, we have started to include climate risks into our financial sector assessment programs. This is a joint product together with the World Bank. We have been developing climate stress tests as well as the supervisory and regulatory methodologies to deal with the climate risks facing the financial sector. Third, we are increasing our climate-related capacity development to support our member countries in terms of assessing climate needs, climate policy needs, as well as financial needs. And last but not least, we are also looking at whether we can use fund resources, our lending capacity, to support climate-related finance. And this is in the context of the historic SDR allocation, $650 billion in August, that we are now working with countries, especially advanced economies with strong external positions, whether they can channel some of their SDRs voluntarily to these long-term structural transformation needs. We have been working very closely with our World Bank colleagues on modalities for collaboration so that we can support policy reforms in countries in the context of this work and other. I want to mention that for all this, it's going to be very important to have a very strong climate information architecture to support private finance flows, because if we don't have private finance, we're not going to be able to reach these goals with public finance only. We have been working with the bank and other partners on several initiatives to bridge data gaps. New climate change indicators dashboard was launched earlier this year. We're also working with them, with the bank and the OECD, on principles for sustainable finance classification so that this could help countries to align investments with climate goals. Marie mentioned the Country Climate and Development Report, the World Bank's diagnostic product, which is excellent with a lot of expertise and a new diagnostic tool. And we are looking forward to collaborating on the macro framework in these climate and development strategies. We also enhanced our collaboration in the context of the HLAG, the High Level Advisory Group you just mentioned. This is on sustainable and inclusive recovery for growth. It is a way, we set this up in June together with Marie and Lord Nick Stern to help secure a strong recovery and set a path for green, resilient, and inclusive development. So really putting all our forces together to deal with this existential crisis that we all need to work on. So much remains to be done, and we will continue to work with all, of course, with the World Bank. So I promise to Secretary Maria Flashbart and all of this audience that the IMF will collaborate, continue to collaborate with the World Bank, other MDBs, and many others to really work on this important issue that that we all have to collaborate on. Thank you.
Thank you very much. And last we turn to Mr. Liam Byrne to provide our final comments.
Sarah, thanks so much. And Marie, Jayla, great to see you again. I'll see you in Glasgow, hopefully, at some point over the next couple of days. And let me just start by saying welcome to Glasgow. I mean, you are in the place that educated James Watt, the igniter and great pioneer of the carbon revolution 3 centuries ago, before he came to my hometown of Birmingham to perfect his art. And you're in a city, you're in a community, you're in a country that is absolutely determined, having helped start the carbon revolution, to now lead the net zero carbon revolution. So I can't think of a better place for you to be getting together to have this conversation. So look, I mean, we're meeting today in the most difficult of circumstances. And Sarah, you're right to say there's still a long way to go. We have G20 NDCs at the moment that are insufficient to keep temperature rises down below 2 degrees. And even, you know, when you look at the G20 targets that we've got, only 5 out of those G20 countries have actually backed their NDCs with clear plans and specific targets. And of course, you know, we're trying to navigate these discussions about the long term while the crisis is not over. You know, we are still $20 billion short of the vaccination program the world needs. IMF has recently downgraded economic growth in parts of the world like Asia Pacific because of the impact of Delta variant. We've got G20 debt at about 110% of GDP. We've got 50 nations suspending fiscal rules. We've got everybody telling us that we've got to double down on social infrastructure and social protection. And so if you're sitting in our shoes here in Parliament, you kind of face this double dilemma, which is, you know, on the one hand, we need to spend more to get out of the crisis. Then we need a social recovery. And somehow we've got to find the money for tackling climate change as well. So pity the poor parliamentarians. There's about 46,000 of us around the world. And, you know, best guess is between now and the Paris deadline, we've got about 7 or 8 elections. So that's about 350,000 democratic moments that we've got in which we have to kind of win this argument. And that's why the conversation we're having today about money is so important, because money is the root to all progress. The shortfalls on the 100 billion are really lamentable. But as Otmar and others have said on this call, you know, 100 billion is nowhere near enough. So look, let me just offer 3 observations about what we in the political world need from policymakers in order to navigate those 350,000 elections and persuade people to vote for good policies to keep temperature rises down. So the first issue is that we need measures that have models. So we know pretty well the measures that create the most jobs, but the business models for those measures outside renewable energy or electrification of transport, the 2 sectors that have attracted most of the 500 billion invested in recent years in energy transition, the business models outside those 2 sectors are pretty poor. We don't understand costs. We don't understand ROI. We don't understand the best financing mix. We don't understand how to minimize risk. You know, in other words, we know nothing about how you would write a bond for the kind of investment that we need in the measures that we need to take to keep temperature rises down. So until we have better models for the measures that are proposed, you know, I don't think we're going to make a lot more progress. And, you know, spent a lot of time at Harvard many years ago studying the American community development venture capital industry. I kind of think that we need a climate development venture capital industry that is an awful lot bigger to just start innovating and bringing some of these models forward. Second, we need to understand what we call here the decarbonisation cash flow curve, not for nations, but for households. So, right now we have wages that are flat. We have global food prices rising by about 30%. We have inflationary risks. We have lots of countries like our own raising taxes. We're putting through taxes that are the biggest tax rise for getting on for 50 years now. We can't go to voters right now and say, oh, and by the way, you need to buy a new boiler, change a car, and potentially pay some extra money in carbon tax. When in advanced economies, a $70 carbon tax per ton of CO2, that's 20% on fuel, that's 80% on electricity, 100% on gas, 350% on coal. We're just not going to be able to have that conversation and get elected on the other side of it. And so, the IMF work that Ian Parry and colleagues done, sketching out how you need to kind of reshare back about 40% of that carbon tax is incredibly valuable. But we've got to get the cash flow curve right, because families can't afford to capex this up front. And we're going to almost have to find a way of doing the fiscal transfer at the beginning of carbon pricing. And again, there is a question about where that money kind of comes from. So extra help, just kind of understanding the decarbonisation cash flow curve for individual families is politically mission critical for us getting up to the $70 a tonne that we need. I suppose the final point is just then a reflection on something Jola just said. The secret weapon in this game is leverage, because right now the private sector piece of the 100 billion private finance plan was the poorest performing piece of all. 14 billion raised, $19 billion shortfall. That's a pretty disappointing performance, if I'm honest. But the IMF's introduction of $650 billion in special drawing rights is a game changer. If we can get G7 leaders to actually, G20 leaders to start mobilising it quickly. We've been having an argument with our Prime Minister here this afternoon about why the UK should be doing more to move the needle on this. But, as a former finance minister, I'm trying to look for big numbers. And the big numbers are private savings for pensioners. $35 trillion globally in pension savings signed up to Principles for Responsible Investment. It is impossible for any one of us as a pension saver to put that money into a company that is not screwing its workers, dodging its taxes, or poisoning the planet. Why? Because the climate disclosure architecture for information is just not there. So some of my colleagues at Oxford have published some excellent tracker work over this week. One of the most striking is the fact that 1,400 of the world's 2,000 biggest companies do not have net zero targets. Their combined revenue is over $17 trillion. So, unless we can defund planet poisoners, we're not going to begin making the progress that we need to make. But at the moment, we can't bend the curve for that 35 trillion in private pension saving, because we simply don't have the climate information architecture. And the IMF staff note on this is a really excellent first piece of work. The International Financial Reporting Council have got some really important work underway. I don't think we're going to make serious progress mobilising finance until that work is sorted. So look, let me kind of conclude by, with a quote from British philosopher Thomas Hobbes, writing 50 years ago here in London, who said, hell is the future seen too late. Well, look, we can see the future now. We can see the problems that are coming down the track. The question is whether we can swerve to avoid what's coming. And I guess, from a practical parliamentarian's point of view, without these three things, we're going to find that swerve pretty difficult.
Very much, Liam, for your closing remarks. As much as I appreciate the insights you offered about the scale of finance we need to mobilise, and I agree, I am going to push back against your call. Won't somebody think of the parliamentarians? I really want the conversation to close much more by focusing on the opening remarks we had there from Marie and Maria, with the people who are right at the front lines of climate change already, the smallholder farmers, the informal settlers, the children, half the world's population is not yet 30 and will still be in the workforce by our decarbonisation deadline, and to really underscore the urgency of this new facility in bringing together climate and development. Thank you to all of our fantastic panellists who have joined us today, online and in person. We hope you will stay tuned in the weeks and months ahead as the Green Recovery Dialogue series continues to tackle these important questions. For more information about the event series, please visit the World Bank Live event page. We look forward to seeing you for the next event in this series. Thank you very much.